At the current market levels, what would be your advice to the retail investor?
I mean, my advice to retail investors have remained the same for last 25 years. It doesn't change with market. They have to do three things. One, be a long-term investor. There's no shortcut in life. Second, please maintain your discipline. Please maintain your asset allocation. Don't become too greedy when markets have delivered excessive return. Don't become too fearful when markets haven't delivered return. And third, and the most important, please do regular investment. You cannot time the market. It's your time in the market which makes money for you. If you do regular investments, you will average yourself in by measuring the ups and downs of the market. That's good enough.
Now, according to you, what should be the minimum horizon for a long-term investment?
The long-term investor is one who is looking to pass some dharohar to the next generation. Stocks are like kids. They are meant for passing to next generation.
Now, with the new long-term capital gains tax being imposed on equities and equity-like instruments, what would you think would be the impact on the mutual fund systematic investment plans, and what is the kind of so-called erosion in the NAV or erosion in the return that you foresee for an investor?
So one, there is a non-level playing field created between ULIPs and mutual funds. ULIPs does not have taxation when people shift between equity and debt. ULIP does not have taxation like long-term capital gains. So to that extent, we have to run a hurdle race, whereas ULIP will run a normal race. Clearly, taxation authorities should create a level playing field rather than allowing one kid to run normal race and other kid to run hurdle race. But subject to that, I think mutual funds sahi hai. They are becoming part and parcel of everyone's life. And even after payment of tax, we will meet reasonable return requirement of our investors.
Okay. Now, with respect to going through an intermediary or investing directly in a mutual fund, what is the kind of alpha that you see an investor can get over the long-term horizon? When I'm talking about the dharohar that you were talking about, when I pass on to the next generation.
So mathematics suggests that if you go direct without advisor, you will save on expenses. Mathematically, that can be proven. But the reality is that life is not mathematics. Life is not run on Excel sheet. I have seen in 2008 when markets were really cheap, people were selling because they didn't have a holding hand. In 2008 beginning, when markets was really hot, people were buying because there was no one to remind them of discipline. So the value of advice is best demonstrated in Mahabharata. Kauravas had more resources, but they chose the advice of Shakuni. Pandavas had less resources, but they chose the advice of Krishna, and ultimately they won the war. You need a mentor, you need an advisor who can handhold you through the ups and downs, and for that, if you have to pay a price, it's worth it.
And another issue is in India we see advice usually comes for free. I mean, how do you at Kotak Mutual Fund instill into your distribution channel or instill into your investors that advice needs to be paid for? Because even SEBI wants that to be separated from the distribution and advisory should be separate.
So one, like we have mentioned in this question, the need for advisor, need for mentor. So we have been educating our customers that if you have knowledge, if you have dedication like Eklavya, then you can learn archery on your own. But otherwise, please go and get Guru Dron in physical form. So we have been educating our customers, our clients, that if they have the knowledge, then they can come direct. But if they don't have knowledge, they must need an advisor support. Second, we are also working with advisor to equip them in technology. We have launched a program called Go Digital that's helping distributors connect to customers on a digital platform that helps them service them better, that helps them mine them better. And I think this kind of approach will ultimately make customer feel the value of the advice.
One last question. What over and above what is prescribed by the regulator and what is done by the business at general, initiatives in investor education that you are doing as a fund house over and above what is prescribed or what has been agreed to by the industry body AMFI?
Sure. So one, if we look at the past, kind of investor education we have done is great. Uh, we have gone to every nook and corner of India in potentially every language to spread the message of financial inclusion. But if I look at the future, I haven't even scratched the surface. Total folios in mutual funds is 65 million, unique customers might be 15 to 20 million. My potential is 250 to 300 million. That means whatever I have done, I have to multiply it 20 times, 50 times, 100 times to reach out to every single potential investor in India. And obviously what we have done is not sufficient when we look at the future. And I think this is a journey. What we are trying to do in terms of investor education is, one, speak the language which investors can understand. It's all about jargonless communication. Second, it's talking in the language which they can understand. It's regional language, not just English, Hindi. Third, it's also leveraging technology to give them ease of investment. Combination of these three things put together is helping us create a momentum which over a period of time will make every Indian mutual fund investor.
Thanks, Mr. Shah.